Hello, happy March 28th as we wrap up this past week's uh, review and project what perhaps could happen here this coming week. Uh, Welcome to my favorite people, the traders that follow along my technical analysis. And guys, just a disclaimer, the information I put forth here is the way with my education experience that I read these markets, trades that I might look to enter. I would encourage you to do your own due diligence as this is not financial advice. Um, let's get started, guys. Let's talk about what catalysts we saw um, this past week. So, geopolitical supply shock in oil from the Strait of Hormuz. Brent crude surged past $100 a barrel following Iran's declaration of force majeure on foreign-owned oil fields and a partial closure of the Strait of Hormuz. This single event injected a massive geopolitical premium into energy and disrupted roughly 20% of the global oil and natural gas flows. The Fed's hawkish hold following March 19th, so to March 19th FOMC meeting, the market spent this past week digesting the dot plot that you hear Jay Powell talking all the time, which signaled only one rate cut for 2026. And actually, some people think we may have a rate hike. That'll be determined. Fed Chair Jerome Powell's emphasis on sticky inflation pushed the US dollar index. Now, listen, pushed it up to a 10-month high, which weighed heavily on gold and silver. And we're going to analyze gold and silver. So, dollar up, uh, gold and silver down. Oil up, dollar up, gold and silver down. So we got some weird dynamics, even though in wartime thesis, precious metals usually run. So we have some strange dynamics going on there. And in terms of precious metal, and despite these war-driven uncertainty, gold has faced its worst rout in years, falling over 20% from its January all-time high of 56.03 an ounce. The combination of the surging dollar and rising treasury yields and oil, guys, has neutralized gold's traditional safe haven appeal. The 10-year reached 4.22%. Also, we had come in hotter than expected inflation data. Sticky CPI and PPI prints early in the week forced a rapid repricing of interest rate expectations. This led to a sharp sell-off in major U.S. indices, with the S&P 500 and Nasdaq both dropping roughly 2%, and the high, which with the higher for longer narrative being solidified. And we're going to look at those in the charts. And then you have the president saying, well, the stock market is going to drop more. So that doesn't help, right? If you're looking at commodities, we have agriculture disruption, global grain markets like wheat, corn, soybeans are heightened volatility as these shipping routes in the Middle East have become compromised. Simultaneously, Brazil has been their soy harvest has been disrupted due to excessive rainfall, and which raises fear on supply side of commodities and a squeeze in the food factor. So, for us trading in futures, we might start looking at some wheat, corn, soybean futures, and actually have some people that trade coffee that's being affected by too. So that's kind of what happened this week outside of Donald Trump and his bomb tweets at any time. That's what we have. Now, going forward, five potential catalysts we have for the coming week, or a number of catalysts. We have Fed Chair Powell speaks on Monday. It's scheduled at 9:30 a.m. after a very volatile week. Now, they've already done the FOMC, but the market will be forensically digesting and dissecting his tone. Is he hawkish? Is he dovish? With hints of any kind of policy panic, which could cause volatility. Right now, it's kind of hanging on because remember, interest rates, are we going to only have one cut? Or are we going to have a hike? Or there's going to be nothing this year? That's going to really influence the markets. We have G7 emergency meeting. Energy and finance ministers from the G7 are expected to meet and discuss the Middle East turmoil. Any announcement regarding coordinated strategic petroleum reserve releases or naval escorts of tankers could immediately cool oil prices, right? Oil down, gold up. So we've got to keep an ear on that. We have scheduled services and manufacturing PMI on Tuesday and Friday. And then the big one Friday, guys, is non-farm payroll. It's kind of a marquee event for the week. Markets are looking for signs of cooling labor market. A surprise hot report would likely eliminate any remaining hopes for a mid-year rate cut. and could trigger further equity downside. And remember, metals don't like rate hikes. So there you have it. Let's get into the charts, folks. Um, All right, starting in the Nasdaq, guys, we are falling through key levels as we look for more downside here. I did enter a trade in the Nas. I hit it the first time and ate a stop loss at the second time. So I hit this trade very solidly about a week and a half ago, and then I entered this trade. Let me zoom in right here. Now I was targeting 400 to 500 points and it paid like 250 and I maintained my stop loss and then I ultimately got kicked out at 150 points. But one thing to look at this, if you were to take this trade, there's a good argument to be made that as the price went into my favor, which it did, I was up nicely, that we could have gone to break even. But my thesis that we'd test 400 to 500 points was pretty solid. But I want you to notice that um, it stopped right at the 200-day moving average, right? So this is the moving average and just double check yep. So the 200-day moving average. Now, one thing we want to look at on all these indices is where is the 50 and 200 and we check this on the daily. So we do have the 50 is the purple line and the kind of burgundy line, as it were, is the 200. If they cross, guys, we start a bear cycle and we're getting close. Obviously, price has failed the 200-day moving average, and that's where it stopped on that trade, and we're going to drop. Now, what you want to do is look where drops are. I see the biggest sign of support, even though I think 23,000 will be playable for my day traders for 75 points. So buying anywhere between 23,000 and 23,150 and hitting that for 75 points, you're going to be inverse risk. Depending on where you enter, you could go 1 to 1 on that, or if you want to be on the bottom side of that zone, you can. Pretty solid hit for 75 points, especially the first time we hit it. Multiple times, no, lessens that. But I want you to see this level here. Okay. Before the tariff uh, uh, fall off back in 2025, this should provide price support. So really, we have declining price and increasing and maintaining volume. I don't think it's unrealistic for us as this war continues for us to see anywhere from 20, definitely 22,000, maybe 21,000 on a throwback. Now, as soon as the war ends, we're going to see a spike. So as long as escalations continue, and this is going to hold true for all of the things that I look at, indices and stocks, with the exception of some new stuff I have for you today. But we're going to see a decline as long as there's ramp up in troops. But then if there's a ceasefire agreement or a deal done, we're going to see it project up pretty quick. So it's going to be like tapping hot water. But I really like the 22,000 zone right now. We're currently in 23,000. So on a swing, I like 22,000. On a fast day trade, I like 23,000. So there you have it. The S&P 500, we broke that VWAP set by that tariff drop. As you can see, last week that was my support zone. We had tapped it, come back up, and then we failed it. So again, that same zone, which occurred in February, that price peak before the drop on the tariff is going to should provide the next significant support zone somewhere right in there. And guys, that's 6,050 and 6,000. So we might see a flash down to 6,000. So if you're trading any SPY related products, that would be a good opportunity to buy. And again, if we see everything end, we always target from previous videos you've seen that all-time high anchored VWAP, which is at 6,800 before we hit all-time high. We do have we are still technically in a bullish market because the 50 here is above the 200, but we've declined that. If price gets down here and doesn't hold, we will see a bearish market. But now what I want to point this out because it's very clear on the chart. This is known as the death cross, the 50 crossing the 200. And we held that from April 11th till May 16th. So just about 5 weeks. And then we got the golden cross. And look what that golden cross provided. Look at this after the tariff shock. I mean, that was a serious uptrend. So this is potentially what we could see here. We could see, oops, we could see, and look how this market has done this, right? Rise, fall, rise, big drop. And guys, we're probably going to see something similar. Rise here and then boom, right? So you don't want to miss this opportunity, but you do want to size in. I'm really feeling like 6,000 troops hitting the ground, maybe some bad catalysts. We're going to see that kind of 6,000 zone. Russell, same thing. We are still in a bullish market because the 50 is above the 200 price. Will have to drop down here, and I've already put it in the zone for you that I'm looking for. We've already shown that 2,400 was a mean reversion. 24 buying into that paid 150 points if you're trading futures or Russell products. But now this next attempt is probably going to fail. So this next area down is the 2,300 area where you can see it had found support. But first it was resistance, then it cleared it, then it was support, and now we're probably going to see it again. And is that where it's going to take off? Lower zones, guys. So we're looking at about another 100 to 150 points lower in the Russell as long as negativity comes out of the Middle East. If we look at Bitcoin, it was asked for me to add on here, guys. We do have the death cross in the Bitcoin. Look at this. So look how much this is sold off at that purple line crossing the burgundy line. That is known as the death cross or entering a bearish market for this. It nearly did it before. So price dropped below that 200, but then quickly recovered. So this was a ricochet, but this is a clear cross, right? We haven't had a clear cross in these markets since August of 2023. So you can see this price is offering support in this range, and I haven't changed anything on this. I think 59 to 60 is your current buy zone. And if that collapses, we're probably going to, if this collapses, it could get ugly, could get down to 40,000, but there would be a good shot at this. Do I think that's the long-term turn? No, but this might be a short-term trade to the all-time high anchored VWAP. And I'm on record saying that I don't think Bitcoin hits all-time highs anytime soon because of the introduction of paper has made it no longer a limited supplied asset, similar to the manipulation that you see in silver. Let's get into oil. I'm going a little quicker, guys, and this is on purpose. I don't like this report dragging on, so I'm respecting your time as a viewer, and I've got some additionals, quite a few additionals for you guys today. I want to get to oil. So listen, you can say that I'm making this up, but you can also just go back and watch my previous recordings because I haven't changed what I said. The the gray box here represents, let me, maybe we can see it better on the hourly. Yes, you can. The gray box is the oil shock gap, and gap provides support and resistance. You can see how we're bouncing into it. And this is the bottom of the red box, which is now green, shows kind of that bottom edge is kind of the tighter trend, but the greater trend, and I've been on record saying it, the all-time high anchored VWAP at 84 and 100. Buy 84, sell 100. Buy 84, sell 100. Now, can it spike over 100? Absolutely. But if you bought 84, take your profit at 100. If you want to take a stab at shorting 100, make sure you have a tight stop loss because that is right now the proven range. And Trump does everything he can back door deals to prevent oil from going over to 100, right? We can get a shock, a spike up there on a catalyst, but he does a lot of backdoor deals to keep it below 100. And then until this war is over and that strait is opened up, 84 is going to be a solid buy. So let's get into some stocks, kind of quick review here. Google, let's go back out to the daily. Same thing, guys. If you take your charts and you go back criticals, we fell through this zone. I made this a gray box because I didn't know if it would hold. Our next leg down is 255. It's currently at the 200-day moving average, and you can see that the purple line, this is, we are still, believe it or not, this is still, I know the sell-offs are tough, but technical terms, this is still a bull market. This is a discount within a bull market. Not until we collapse that VWAP through there, and price is going to have to get down here. I think this is the next support level is 255. If we hit 200, that's going to be a buy all day, but we'll be in a bear market. So keep an eye on Google. Some of the other plays we've been monitoring. Oklo has failed the um, IPO anchored VWAP. No longer going to be a trade until that recovers, right? Other than that, you're buying fundamental discounts, and when you look at all these guys for a fundamental discount, one of the things that I do is how much of a price discount again. If it gets down to $20, when was the last time it was priced at $20? So a year ago. So I'm getting a year discount. And if that's not a technical buy, that's a fundamental buy. I like this company. I like its fundamentals. I'm willing to buy it at 20 because that's a year discount. But really, I think the best buy signal is when we re-clear that zone. All right. So you just wait. If it drops and comes up, you ignore this price and you wait for confirmation. Okay. Be on the safe side, unless you want to dabble in and start sizing in, but you do that in lots. If you see my risk management stuff, you know how to do that. M&P Metals has held this zone we've talked about where we've had multiple touches in here, right? So M&P Metals or materials, it's the buy zone is technically right around $50. The concern with this trade is taking it in here with a stop loss commensurate with what you're comfortable with, then running to the all-time high anchored VWAP is a pretty tight risk reward here. So a clear buy signal would be a touch of this IPO anchored VWAP and then set that same trade plan there and gives you the opportunity to run it higher, or a flip of that all-time high anchored VWAP where then you run it to the all-time high. You'd have resistance at this price too, right? You have to kind of dip your toe in the water, as it were, at this level. And of course, if you already own it, where I'm saying the opportunity to buy is where you want to raise your stop loss to. BBAI is looking like absolute garbage. The AI sector is getting beat up. And you can see this trade plan that I made last week is still in play. I like this buy in around 240 to 250 is the next level for a discount, and then running that to the all-time high, and then having a risk commensurate. Is it 50 cents? Is it a dollar? It's up to you. So I'll be interested in sizing in there because I think this company has a lot of upside, even though they significantly added to their float. We're going to watch it. So right now, it is not a buy, right? Until it reclaims some key levels or bounces off of lower levels. Pony fell right through this support area that we were trying to expect. It hit it and bounced, but overall market pressures are strong. Downside support, it's at $9. I'll be interested in between 4 and 5, right? One thing you can do is let's set an alert just under $6. If we're not staring at charts, that will tell us. So look what I did here, guys. I scrolled, clicked the plus sign, and that sets the alert. And so it'll alert my desktop, it'll alert my phone when that goes off. Right now, it is not a buy. Same thing. You would like a fundamental buy at this lower pricing, which gives you its all-time low, which actually should provide support. If you like, I'm extremely conservative. Where do I buy? Right here. It has to reclaim that on a 2-day close filter. That is the IPO and all-time high anchored VWAP, right? It's ugly right now, right? If you were in any of these trades and you were significantly in the money and now you're watching your unrealized profits drop, you need to have a conversation with you for future plays. Like once I'm up 10, 20, 25%, 100%, I will and I need to take profit. I'm not going to leave that much on the table, which brings me to QBTS. I got kicked out of this trade. The IPO anchored VWAP did not hold. It's this line right here. So I got kicked out just below that line. There's still a trade plan set up around that, but if there's more downside, I bought it at 8. A lot of people bought it at 4. I made nearly overall between 200 and 300% in this trade. But look how much money we left on the table. I mean, at one point, that was a ridiculous amount of money. And it's a talk that I'm going to have with myself. And the reason why I didn't take profit is I wanted to hold this company for years, right? Now, hindsight being 2020, I should have sold back here, but that was not my thesis. And I honored my thesis where I locked in a significant amount of profit. 250% is a lot of profit, but so is 2000. All right. IonQ, Same thing. It's gotten ugly. It's broken the IPO anchored VWAP. So now you got to look to price. Next support zone is lower, 18, and it's at 27. So if the indices push down harder, these stocks line those baskets, we're going to see kind of that same level. So this would be a fundamental buy, right? If you want the conservative buy, it needs to reclaim this zone, kind of like it did here, and shot up. And again, we target the all-time high anchored VWAP is TP1. So something like that, if it whatever your risk is, to that. Or you do the same thing down here, you'll hit resistance at the IPO anchor VWAP because once it's flipped from support to resistance, which it has flipped, that's a 2-day closed filter. So TP1, TP2, and what do you see in the charts, guys? What do you see in the charts? Death cross. We're entering a bearish period for this stock. Okay, this is not a good look, right? On any of these that have done that. I've put the 50 and 200. We have that in QBTS. We have that in Pony. We have that in BBAI. If I looked at any ETFs related to the AI thesis, they're all in a bearish period of time right now where the 50 is below the 20. But guys, that brings in massive fear, but it also gives opportunity to buy on these companies that will be here to stay. So I still like the companies. You should have taken profit and protect your position, and we'll rebuy it and we'll make money again. Um, QUBT, same thing. There's your death cross, and we're below the IPO anchored VWAP. This is the next buying zone between $4 and $7, and that's kind of crazy when we were talking about it back around 27. TP1 would be right there at the IPO anchored VWAP or that zone. If you want a conservative play, you got to wait to clear that. You got to let price lift back up. Um, all right, UUU cup and handle that has nearly been broken. It's not technically broken yet. It will break. We'll consider that a break when it touches bull bottom right around that 200-day moving average. If you want a trade that's solid on this one, it has to reclaim that zone, right? Right there. And as these two merge, we don't want to see that VWAP cross that one, right? So only stay up there, there's going to be opportunity. I would contend that this is a very high probability cup and handle that was defeated by Donald Trump's war. Right? Remember, market pressures supersede all trades, sector pressures, and then individual stock catalysts. Right? We have market pressure with this because this is nuclear energy is going to run. So it's just a matter of can you get in, right? So keep an eye on that 200-day moving average, and then this zone I've already identified for you in weeks past is where a lot of buyers stepped in and stopped this initial drop and created this bull. So down between, we'll call it 12 and 13. So first resistance or support 16, below that 12 and 13. If you have any questions or comments, you can tag me in any of the groups that I serve or put them down there in the comment section of this video, guys. Ego, right? It's holding on. You can see this spike that I identified later. Remember when I drew that price was over here? It's not by accident, guys. Price set your first support resistance, and it did prove to be support, which is also at the 200. So you have the confluence of price and 200 holding there. We still are in a bullish period. Kind of the deeper zone of support buying is 24 to 28. Right now, this is trying to hold up, but one thing that is concerning is buy side volume is failing. So we may see deeper penetration, especially as the markets drop or if gold drops. HYMC, kind of the same thing, almost identical because they're the same sector. You can see this zone between this wick and this test of it. We're holding right there. All right. Declining volume, we may drop down. I identified this gap for my viewers last week where an absolute discount lies. But we're hanging on here. TP1 would be all-time high anchor VWAP. If you're long-term buy and hold on this, you want to see it reclaim that all-time high, right? Because when it does that, we're going to start seeing these prices again. So let's get into gold. As I talked in the initial report, we're down 2% from the all-time highs. It's higher than that, isn't it? Well, I can measure it. I mean, at its bottom, it was 27%. Yeah, the report was 20. So we're, yeah, approximately 20% from that peak. We do have some recovery down here. It did bounce off the 200-day moving average. And to be quite honest with you guys, I was shocked. Let me move this. That I think I'd be better at driving these charts for you guys. You see this top right here at 4,400. This was such a difficult level to break. And when it's a difficult level resistance point, it's always a significant support zone. You don't believe me? Check out this green line. If I let me do this. Let me extend it actually. There. You see how that was significant resistance? And then look, the big sell-off found that support right there. And I honestly believed that we would hold again. Now, technically speaking, we have, but I was really surprised by this penetration. You're like, well, Sean, you said 4,400 was support and it dropped down to 4,100. True. But the way technical analysis works, guys, this candle is known as a false break of that level. That level has not broken because the close was at the level, even though we pierced it and then buyers came back in. Now, sellers won this candle, but there was a ton of buyers there, and it held the second time. It held the third time. It collapsed on Thursday, but we regained it on Friday. So that was not a 2-day closed filter. So this level technically is holding. Um, so if you believe that this conflict will resolve and the oil issues will resolve soon, this is an attractive buy zone. The one thing you got to be careful of is you got to ask yourself, is this a half mast formation for further downside? Right. So to protect yourself against that, any buy in this area needs to have a stop loss right below it and use that previous wick, right? So any buy in here and then try to run it back up to key levels 46, 47, 48, 49. Right there is probably where it's going to stop. Somewhere in there, the confluence between the all-time high anchored VWAP and that 4,900 level. So there's a trade plan because a lot of you guys asked me in about gold. So obviously a very wide swing trade. Right now, intraday 4,500 is showing as resistance. If 4,500 flips, we can buy 4,500 and try to trade it to 4,600, like 4,685 when that psychological level begins. This needs to be over, right? But this is a very wide time frame. And I've had a lot of questions, guys, that have asked me, I own physical silver, I own physical gold. Should I sell it and buy it at a better price? No. If you own physical, hold it. If you're on paper and you're trading it, that's a different story. If you own physical, just hold it if you can. I'm still buying silver, guys. Even at these prices, I've bought it for years and years and years and years. You can see this trade plan that I developed in my last couple of videos paid out, depending on your risk. It paid very nice. I said 64 would be support. And then down below that, I call them 54. And guys, that still holds true. That hasn't changed. So right there, right? Look at that. The tap into the zone. Now it hasn't paid to the all-time high anchor VWAP, which we're targeting. We hit resistance at 71. Remember, why did it hit resistance at 71? I've talked about this a lot. That was the bottom of the initial drop off the all-time high. And then that's why 71, you hear me talk about all-time high, 71, 64, 54, right? So if buyers need to push through this level, then we might see that all-time high. And if we reject, we might come down lower again. I am not trading futures or CFDs uh, in silver. I've ceased that. I've traded thousands of contracts, but I've only traded one grouping this year due to CME manipulation and increased brokerage fees and volatility. But I am buying physical silver. I bought as recently as even 2 weeks ago, where prices were higher, and I don't care because I bought it when it was $10 too. I'm just buying more and more silver. So have that information, do as you will. This trade plan held up. The 200 moving average is real near this buy zone at 64. Still an attractive price. You might, if you want to do a short-term trade, 64 to 71 might be good. Optimistically, 64 to 82 or wherever the all-time high sits at that time would be good. Do I think it's going to see all-time highs anytime soon? We hope, but again, manipulation, right? Platinum sitting at the 200-day moving average. Watch We already tested this 1726 zone that I've identified that I threw on the charts before. You can see it tapped and ran back up. That zone is still valid, kind of 1700 to 1735. Run it to the all-time high anchored VWAP, which is 2100, guys. But you're going to have to get through these zones. Nice discount buying back to October 25. Um, Again, when metals run in general, these will run as well. Palladium never hit all-time highs, right? So it has a lot of potential, but look how price suppressed we are. This line would be here, and we're just flirting with it right now around 1355. If it gets down to 1,000, I mean, that's absolutely, in my mind, 1,000 to 1,100 is a buy. But I'm going to be curious to see how this zone right here holds. Because remember, palladium has never seen its all-time high exists up here. It's the only one that didn't tap that. Now, unfortunately, we do have the death cross pending here. If price drops down, I don't think we're going to see it. You can see the purple lines, the 50, burgundy lines, the 200. This is still, I know, I know. Well, Sean, it's selling. It's still a bullish period, guys. That's still a bullish period. Copper, the thesis is strong on this. The price suppression has been difficult. You can see this level here is support, kind of like I drew it out this whole time period of October 25. Pricing is holding and it bounced nicely. If we see $5, I drew it on the chart for you. That I think $5 is definitely a buy, and running that to the all-time high anchored VWAP. Guys, you just have to get in and out of these trades. Take small wins, take small losses, and then the time you're in, that's when you hope it ignites, right? You just got to keep throwing your line in the water, fishing, be willing to miss the fish or be willing to catch the big one, right? But don't just blindly buy and hold. Um, Mitigate risk, right? So it's okay because look, guys, when we traded this stuff, look how much money we made. We made. It's okay to re-enter these trades, take a small loss, take a small loss, take a small loss, take a small loss, and then hit a trade, right? A nice swing because your net profit, even with small losses, is phenomenal at the end of the year. All right. So I kind of flew through those for the sole purposes. I wanted to talk about uh, wartime stocks for you guys because I want to add these in. I've identified some critical ones for you because if this war continues, these benefits, and you'll see it in the charts. Um, we have on the list, we have Lockheed Martin LMT. It's the world's largest defense contractor. It benefits from high demand from F-35 jets, missiles, and missile defense systems. We have Northrop Grumman, that's NOC. They're a key player in stealth bombers and missile defense, often seeing significant gains during these escalating tensions. We have General Dynamics. It's a diversified defense leader with a massive backlog providing armored vehicles and shipbuilding, highly sensitive to conflict, right? Meaning as the markets drop, these are the ones that move opposite of the market. We have, and then the best ETF that I pulled up is iShares US Aerospace and Defense. It's ITA. They're the largest defense ETF offering a broad exposure to top US contractors like GE Aerospace, RTX, which we're going to talk about, which was formerly Raytheon, and then Lockheed Martin. So you can, it's kind of a basket of stocks instead of the individual stocks. And then Global X Defense Shield's kind of, I put in Shield, SHLD. Close second, if you're interested, would be ARMR. I don't have it on this weekend's report, but you can look at it. They focus on modern warfare technologies, including the drones, the artificial intelligence, cybersecurity, and which are all critical components of all this. Palantir obviously has to be on the list. Uh, AV specializes in drones because there's so much drones and robotics in this, so they have high growth potential in the modern combat era. Like I said, Palantir provides critical data analytics for intelligence operations. Guys, it's scary tech. I owned Palantir back at $6. It's now 143. Of course, I sold it at 18. It made 300%, and this was years ago. Um, Personally, this is a scary company. And then, like I said, RTX, which used to be Raytheon, they're a major supplier of defense equipment. So all the missiles and the sensors they provide. So they're going to benefit from all this war. Even when the war is done, you're going to see this in all their earnings reports. And then finally, I pulled up an energy sector ETF for you guys, XOP. It often surges during conflicts in the Middle East due to these supply disruptions that we talk about. So I'm going to quickly analyze potential entries on these. If we get into LMT, all right, Lockheed Martin, you can see it's in a very bullish period right now. So you want to look at discounts. This is a great time from its spike in November to run a Fibonacci on all these. So a fib tool, and we look at the 618 or 50% retracement, and then target the all-time high. So look at where the golden ratio is, and it's confluenced with um, this gap up. So here is a decent buy zone. Well, isn't that magic that it's already tapped it once and bounced? So we want to watch at it kind of 594 to 604 for a potential entry and holding it long. And if you did that, you would buy in that zone, risk commensurate to what you're comfortable with. But I'd be just on the other side of that. Then you could target the all-time high anchored VWAP or higher as your TP. Northrop Grumman, same thing. We do have downside support at 641 off of this ledge, but again, running that Fibonacci to see if we can confluence any of those numbers from the same run in November. You have the 618, it's floating with that. If you look at kind of a lower zone here, so half the move is 660, which is probably a decent buy. So I'm going to say 645 to 650 using that half the fib and that price peak there, right? Also, guys, I didn't do any others, but if you bring in volume at price, you're going to see it also, right? Actually, let me move it back. Okay, the point of control of this is much lower, but the point of control exists where the most buying and selling of the auction exists on measuring this. But right now, this is an invalidated price because we are in war, right? But what I want to show you is price doesn't like gaps. It's hanging on this cliff and it may gap down to here, which is at the bottom of my zone. So keep an eye on that. 641 to 660. So 640 to 660 would be my area of interest, doing the exact same plan on a trade plan. Stop loss commensurate to your risk. Say it with me, guys. We run it to the what? All-time high anchor VWAP, TP1 or higher. All right. General dynamics, wash, rinse, and repeat. You're going to see the same thing. Point of controls down here, but again, invalidated right now because the war is going on. We have this price point, and let's run a fib. These are all in the same sector, so yes, the information is going to be almost identical. Where's where do I want to run this one? I'm going to do a bigger fib on this one. Let's see. Actually, let me delete that fib. Let me get rid of this for a second. Let me look back at what was that date? November 25th. Let's look at where um, General Dynamics was November 25th. It was doing quite well, actually. So it's going to be tough to run a fib from the same timeline. Let's do a wider fib. Okay, so this price is at 618. That's what I'd be looking for, even though 786 in a hot market is really good. On this one, I would demand a little more of a discount to enter because you can see how widespread this is. So we'll keep an eye on this for 3-4. Let's set an alert at real close to 325 in case we get a drop here. But this war continues. This current area at the 200 and this pricing is probably on more support short term. This would be a better discount on any kind of cooling news. So, but remember, even if the war ends, we could see a drop, and then you start seeing, okay, so war cooled off, but then you start seeing it climbing back up because remember, there's a delayed, and every time they do an earnings report quarterly, that it's showing up in their numbers that they created more tech for the military, created more tech for the military. right? So this is not an unreasonable zone to identify. So just what is that? 315 to 320. Uh, iShares, aerospace, same thing, right down here at this 200 moving average. Uh, we're going to run the fib from November, a little tighter. You could run it from back like I did the previous one, but let's look at it right here. We'll run it with. Okay, so it's given more than half the move back. It's coming here. I think what I'm seeing right now, a better target is, let's see how it reacts, and I'll put this line in for the next chart. The Let's see if that 200 moving day average provides support for price. We're still in a very bullish period, guys. Let's run a regression trend line on it from the tariff to see where we're at. Yeah, so we're as way as two standard deviations work. We have a 95% chance on it going back into trend, and less of a chance of it creating a new downtrend, right? So I think anywhere from 200 to 210 might be the buy on this bad boy. Remember, this is the basket that includes a lot of the previous stocks. All right, Shield, also an ETF, same thing. Let's look at that. Keep an eye on the 200-day moving average for a discount. And then we're going to straddle it. We'll say 65 to 67. Let's set an alert in there also. I'm actually going to do it in the middle of the field. There you go. This is just an uptrend. Tap. You can see, guys, why using a 200? Long-term trading, you can use a 200. Look how long it's been. And of course, the 200 didn't start moving because this iShares is relatively new. Let's put a anchored VWAP to that to find out where that is. And remember, IPO, anchored VWAP should be white. Yeah. So um, it really is respecting that 200-day moving average. So we get close to it. We like that, especially in the current atmosphere. Uh, AV, this, I'd analyzed it before, and I said that this was resistance, and you can see it. And actually, this was a double top, guys. So what a double top is an M, so with a peak, a valley, a peak, and then when the neckline is the valley breaks, which it did here, that creates a sell signal. So right now, unless you fundamentally want to buy this company, I would hold and wait for close of the confluence between that neckline and the IPO. That has to break, right? So of the ones that I did in my research, looking at the chart, this is now resistance. So we want to see it flip that on a 2-day close filter, right? We want to see it flip that and then confirm it. That would be my buy. So we will just monitor that one. I don't like that one. I mean, if you're looking for more support, you look to downside to price down here to $100, which is a pretty significant drop from where it's at. But we will continue to monitor this one, and if it doesn't perform, we will remove it. And starting next week, I will start removing some to expedite the time that you have to spend listening to me ramble on. But if you find this information useful and beneficial, and you know somebody that might, please like, subscribe, and then share it to them. Palantir identified this discount zone in previous technical work that I did for folks, and it hit, right? And now we're declining. And let's talk about that for a second, because you say, Sean, you identify zones and then say target the all-time high anchored VWAP. Would that have happened here? Buy in that zone, stop loss there. Oh, well, holy cow. Is that, huh? I must be, I must be just making stuff up. Where did that price stop to the penny, folks? That's why I'm telling you to trade plan that way. Buy support, sell resistance. Buy support, sell resistance. So this is still valid here, guys. Kind of 125 is your median price, give or take $5. Run it back up to 162. Still valid. That trade plan. Isn't that amazing how that works, guys? Find price support, run it to the all-time high anchored VWAP. Raytheon, or RTX as we should call it. Price support is here. You could run fibs on this one also too, back to the April. You can just rewind the video and watch how I did that. But I'm going to look to price. Why, Sean, why do you look at price all the time? Guys, it's the number one leading indicator, followed by volume. So you can see here, then we had this gap. So this gap also will, at the top of that gap, provide support and resistance. And that is relatively close enough to the all-time high anchored VWAP that I would say your buy zone is right there. So buy zone between 69 and 178-ish, 179, $10 buy zone, right? Look for the turn, size yourself in. Finally, let's get to the oil and gas exploration, and you can see it is just going nuts. So we can't buy it. This is a great indicator of don't buy it until it calms back down, right? Can it keep running? Yes, but I don't like chasing. So so this is obviously the break of trend. So you see how this was very flat and channeled. This is the break of structure, this explosion out of that. So we're going to set an anchored VWAP to that, and we're going to make that green, and then we're going to fib that movement from that break of structure. And we're going to look for a discount in there. Your 200 is half the move. That's great confluence. There should be great support there. But if this thesis is strong, often you don't get half the move. If the thesis is strong, you're going to look towards higher fibs, right? The 618 or the 786, right? This one may be too far gone for us. So demand a discount down in, the 164, give or take a few dollars, or 155, let it cool off a little bit. So don't chase this one, but you can see what that's doing. If this thesis stays hot and you want to size in, you could do it up here at the 786 for something to do this and retest, right? And I love fib extensions because that 1.618 is a great price target. All right. So I don't expect you guys to get everything that I talked about. Hopefully each time that you come uh, to these, you learn, right? You pick something up in the quick analysis. So thank you for spending your time with me. Like, subscribe, share, get this information out to other folks. And we'll see you in another week here on YouTube or in the groups that I serve. Have a good week, guys.